Shadim Shari. It is Tuesday, one more day before Thanksgiving. Well, 2 days, one day before the market close. Tuesday, November 26, 2024. Let's go over some discretionary stock that I talked about in October and see how they perform. First up is COTY. I like it here, right? So it have, this is the fib. It came down to the fib nicely and bounced. I believe there is still room to run. All right, I would like to throw some money in there. In fact, I'm looking, if I have a red day, or is there options? Is there option? Analyze, trade. There is option, monthly option. Let's see. There's not much going on. 7. Yeah, there's nothing you can do here with options. It's kind of terrible. So buying the share, it is on red into. Not that I think we will see 6.93 or 7 again, but I wouldn't mind paying 7. Right? I wouldn't mind at all. From 7 to gap fill, yeah. I don't think anybody would who doesn't want a 30% return? Who doesn't want a 30% return between now and the end of the year? I think there is a chance there. All right, you get the tax loss dump, right, and then the stabilization, and then earning, and that's it. It's I think I'm comfortable saying that I think the short-term bottom is in. Now, the other cosmetic, you got the perfect confluence of tax loss dump and earning. So October 31st, nasty dump. Bottom is there, right? It based for a while, and the last few days, it got a 10% move already. Yeah. Already get a 10% move. And then if you get to the gap fill, you're looking at a 20% move. Yeah, there's a 20% move here. So take your pick. On the risk reward play, I prefer COTY. Okay, the cheaper brand in cosmetic, I do. I think COTY is a bigger bang for the buck. But if you want to spread your risk around, it's not bad here either. And then the one that I already have a large position, ELF. I don't hate it here, right? Certainly it found the bottom here, and then the news that Warren Buffett got out of OTA scared the sector. But ELF is the winner, clear winner. It's the one that is growing and will keep growing because it is high quality, reasonable price. It used to be cheap as dirt as far as price. You know, you can go buy all kind of makeup stuff for like $5 or less. But over the past 2 years, they have raised the prices of their stuff from to $10, $20 instead of like $5, $6, $8. It's still cheap compared to COTY and Estee Lauder as far as price wise on similar product. I like it here. I wouldn't buy. I'm comfortable with my ELF stocks and bull call spread that go out until the end of December. So I'm fine there, right? I'm not adding to it. If I'm gonna throw money into this sector, it's gonna be COTY and Estee Lauder. All right, let's move on to Dollar General. I bought on a tax dump, right? And the position is red right now, and I'm fine with that. The only reason why I'm not adding to this is earning for both Dollar General and Dollar Tree is, I believe, next week. I'm very interested in adding to both, but for now, I'm gonna stay conservative and be happy with the share that I have. Right now, this position is losing money, and I'm fine with that. Okay, it's basing, and the one that's basically it's a net even Steven for me, because whatever money I lost, I am losing with Dollar General. Dollar Tree is winning for me. I like Dollar Tree just as much, but as far as how it performed compared to Dollar General, yeah, it's up nicely. The gain here more than offset the loss over there, and same thing, earnings coming up, and this downtrend, however you want to draw it. So I draw this channel, right? But another way to draw this downtrend is like that, okay? So to me, there's a couple of resistance. Here's one resistant, here's the next one, and then of course the gap fill, all right, at roughly 81.4. So, hey, 81.4, that's still 15% plus up there, and if we get to the gap fill, I already got myself a nice 20% plus return from my cost of 66-ish is my average cost on my share. So yeah, I take a 20% return right there, right? I'm not saying I will sell at 80 at the gap fill, but for sure that's the first spot to trim. I do believe there's a chance to get it up into the 90s, mid 90s by Christmas. That would be a nice Christmas gift. Okay, last one for the day. Target. What a nasty dump. Nasty. But it has. See, whenever you have here's a clue. Whenever you have a big gap down, like this, and the stock is above the high of the gap down, that's a decent, that's a good move. Okay, that's a positive thing. It does not mean that you should run in there and chase it. Look, this stock has done this multiple times. Okay, multiple times. Look, gap down, and then it bounced pretty quickly into the gap fill, and then run out of steam. Right? Multiple gap down here. This is one of the rare occasions where earning vaulted into the spot where you get a trim, right? So it's a good stock to trade if you play small and get in and out quickly. I wouldn't chase it here. I don't have anything in target right now, but it's definitely worth watching. Okay, it's out of the 1, 2, 3, 4, the 6 stock that I talk about today. This is the worst one. All right, everything else, I would rather buy the other 5 that I just mentioned in the last 10 minutes. This is the worst one. I'm not. If you have it, be careful for sure. 137 should be a spot to consider trimming, right? Or at least here, right? It's the fact that it got almost to that point and retrace. That means that some people are using this as a reference to get out, right? So it needs to absorb this first. Can you imagine buying here? Think about this. This is the psychology of how things play out, right? Or potentially could have played out. Imagine buy on a dip here and then get super happy on this pop here, but you hold on because you drink the Kool-Aid that the economy is strong, consumer is fine, nothing is wrong, and Christmas is coming, and people is gonna go out to Target and shop and shop and shop and shop, and then you get the smackdown. And then you're like, get me to even, and I'd be happy, or small loss, and that's what happened, right? Some of the seller here is some of the people right here that just like, damn, wrong,